Greetings, dear ladies and gentlemen. My name is Ivan Maltsev, and I'm a general partner at 3x Capital. We are Web3 focused VC fund. I'm personally responsible for the due diligence process in our company, and I'm managing the team of investment analysts. And today we have a special guest, Brian from Santiment. I'm truly excited to learn more from you, Brian, and discuss different insights and trends that were happening during this crypto summer. How are you, Brian, today?
I'm great, Yvonne. It's wonderful to be here and to talk markets with you here in early September. Lots to uncover as we've been looking through some of the data here in crypto and trying to figure out exactly why we're seeing the pullback that we are right now.
Yeah, I'm also quite interested to learn more and see what technological developments have happened in your platform. So I'm really curious to see what you guys were working on, because we are using Santiment for internal purposes, but also trying to share with our community some educational materials. And always it's nice to see your progress. So I will start with the first question. Could you please provide the overview of some key market performance indicators that have shaped the crypto landscape this summer?
Sure thing. I'm sharing my screen now. Let me know that you can see this okay.
Sorry, Brian, I do not see your screen as of now. I will turn it on just a second. And
Okay.
probably, yeah, now we see your screen. It works.
Perfect. Okay, so I wanted to start by looking at the past 30 days of price performances, just to get an idea of how things have been fluctuating, what Bitcoin looks like versus the many altcoins. And you can see down here, Bitcoin over the past 30 days is just barely up. It doesn't seem like it, but just about 1 month ago from the day of this recording was the much larger crash, or at least the much sharper and rapid crash that occurred on August 4th and 5th. And we are just barely up on that, up 1.3%. You can see Ethereum is down 5.5%. Toncoin is one of the biggest losers of the top 100 market caps, down 17%. And then you have a few that have done very well. Of course, Tron with its new meme coin applicator up over 22%. A few others that have been performing well, Fetch, as well as Sui, Aave, and Helium here up a whopping 74%. So there still have been many success stories and assets out there that have been able to carve a name for themselves despite the very choppy and volatile prices. This has not been a retrace that has been basically a ton of altcoins being bled. Yes, there are many that are retracing and being impacted negatively due to Bitcoin's own drop, but several have been able to do okay, meaning that the market caps overall in crypto aren't hemorrhaging quite as much as it may seem. And on the social volume end, we can see that almost everything is getting a higher amount of discussion compared to 1 month ago. So this is the past 30 days versus the previous 30 days before it. And you can see, of course, Tron having a huge social volume spike of plus 163%. There are a few that are getting less. Bitcoin Cash, I see Bonk over here. A lot of struggling assets that have been underwhelming and underimpressive are the ones being talked about less. But you can see the overall majority are getting much larger amounts of discussion. Now, if we go to another metric for looking at how much people are talking about crypto right now, we can take a look at something like 70K to 75K versus, we'll go with 40 to 45K. As you would suspect, these are the levels of discussion related to high optimistic prices from where we are now and low pessimistic prices that people are fearful of. So this acts as a very good greed or fear metric for markets. And you can see how precisely the low and fearful numbers here correlate with the bottoms, and the very greedy numbers up here correlate with the tops. So the latest was really this one here that called the local top very well back on August 23rd. And then here, which called a very slight bottom before we started to see a little more sliding. Now, I think this is a bit of an anomaly, which has been going on over the past week. You can see clearly the amount of red, or 40 to 45K calls, is actually up, but prices are still sliding a little bit. I would say all we need is one or two big spikes where people are really fearful of 40 to 45K, and suddenly we bounce. Now, this isn't a perfect science by any means, but you can see just how much the correlation is evident over the past 3 months, and we can do this same exercise for years if we just go 15 to 20% above whatever the price was, or 15 to 20% below the price was. So I'll stop there. I know I've been talking about a few different topics so far. What other subjects have you and your team been eyeing at the moment?
Sure. This is super insightful regarding social media metrics. We also see a lot of interesting insights from our investors and from our community as we communicate. So when the price goes down during the summer, investors try to avoid any possible opportunities. But from my point of view, of course, it's not a financial advice. I can be mistaken. During these periods of time, we should be focused, and we should keep an eye on some interesting on-chain metrics that I would like to discuss today with you as well. And of course, social metrics. So I see that the market downtrend is correlated with the interest of community to the crypto. Do you also see this type of correlation based on your social metrics?
Yeah, to clarify, you're talking about the correlation with the equities markets right now?
I'm more about social media trends and behaviors correlated with the Bitcoin downtrend and with altcoins downtrend.
Yeah, I think that's fair to say. One thing we can measure that would be the overall social volume related to Bitcoin and the weighted sentiment metric that we have. This is the weighted sentiment metric. And as you can see, we were getting a lot of greed. Anything above this zero axis means there's a little more greed and optimism toward Bitcoin than usual. Anything below means there's a lot of fear. So from May all the way up until July, we were actually getting quite a bit of fear. And then right here, when it suddenly flipped and people got optimistic, suddenly we see a local top, and it starts to be a bit of a roller coaster, which has resulted in us getting pretty close back to where we were back in early August or early July. We're not quite there yet, but I think right now we really want to be able to start to get fearful once again. If the crowd is starting to express concern over us getting back to 50K or below 50K Bitcoin, that's going to reflect as a positive sign for all of crypto, because it means that those small retail traders are selling off their bags.
Mm-hmm.
You can also see here in the total amount of holders category, there hasn't been a lot of rise. There was a bit here in mid-August. It's actually a good sign when we're flattening out or people are dropping their small Bitcoin wallets. It means they're going toward whale wallets. And that's what this chart is. It's one of my favorites, and it's measuring the total amount of Bitcoin held by all of the collective wallets that hold 10 or more Bitcoin. And the 3-month trend has been very strong. While all of this volatility has been happening, you can see the 10 plus BTC wallets have added a little over 34,147 Bitcoin during that time, for a 0.21% increase. which may not sound like a lot, but it's actually quite healthy. We can go back in time here. Whoops, not all time, but we'll do the last year. I'm going to full screen this, take off the axes limitations for a moment. You can see over time, yeah, they're pretty much always accumulating in some respect, but the times that they get are the times when the price has a little bit of struggle, such as right here. Now, I'm most, I should say, I'm most worried when it's climbing rapidly. The flatness and when it's going down is actually when prices are rising, because the FOMO is tempered and there of new, very small retail wallets that are benefiting. It's the whales that are benefiting most when these wallets are going down over time.
Mhm. Yeah, truly agree, because at some point the small wallets start to liquidate their positions and sometimes realizing significant losses, and probably
Right.
whales are just taking back the coins and increasing their portfolios. But it's quite interesting to see that the amount of 10 plus BTC wallets went up more than actually 20%. You mentioned around 30% growth in the amount of wallets. Am I right?
The amount of whale Bitcoin wallets, or just overall?
Yes. 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 Yes.
So over the last
In-
year, it was 0.23% 3 months, but over the past year, it's climbed by 1.51%, which
Mhm.
over the course of history, of course, you're not going to see a 10% rise.
Mhm.
But this is the overall amount of the Bitcoin supply. So this is a 1.51% increase in their total Bitcoin holdings, not the addresses. And over the past year, they've added 241.24K more Bitcoin collectively
Wow.
when combining all plus BTC wallets, which
Yeah.
is many billions of dollars. I won't do the math. Yeah.
Understand. Interesting. I'm curious to learn more about the influence of Bitcoin and Ethereum spot ETF. Maybe you can share your insights on both, especially
Sure.
during summer, because Ethereum spot ETF, I think, was launched in June, if I'm not mistaken.
Yeah, it was in June. I can look at something like Bitcoin ETF. These are search queries for how often these decks are coming up on social media. I'll do two things: Bitcoin ETF or BTC. That'll be one topic, and then we'll do the same. I'll shortcut it here, copy paste, and then we'll just switch these to Ethereum and ETH. And we'll put these on a shared axis here. So if we go back just a full year, all the way back to the Bitcoin ETFs that launched in January, which was right here, you can see the initial impact of the Bitcoin ETFs was actually a market top. The green line is, of course, Bitcoin's price, not Ethereum's. We can switch to Ethereum's in a moment. But in terms of Bitcoin ETFs, you can see the initial reaction was about 3 weeks of retracing, 2 weeks of retracing, I should say, followed by a giant bull rally, basically the resumption of the bull rally that started back in mid-October. And then finally, we hit that all-time high. Of course, the mentions of ETFs were starting to wane a little bit here. And then we kind of had some chopping and a little bit of a gradual decline, and then a rally. And then look at this, right around the top, a couple weeks before, but right around the top is when we get the initial surge of Ethereum ETF excitement as it is announced they're going to be launched. And then I believe it was right around here, if I'm not mistaken, late mid-July, when we had the Ethereum ETFs, and we get another local top. So you can see there's definitely a buy the rumor, sell the news impact here, where people get very hyped when they hear about the ETFs, and then when they're actually launched. This was the hype cycle for Bitcoin ETFs, and then this was the actual announcement and the official launch of them. When they're announced, we often see a letdown because the price, from a theoretical perspective, is already getting baked in to the reaction of what prices should be like with the existence of ETFs, if that makes sense.
I think it's super insightful because we in the future can use the rule, as you mentioned, sell the news, at least fixing a part of our portfolio on the announcement in this specific asset. Because later we can see some downtrends. I remember the Bitcoin ETF launch and the performance of Ethereum. Do you remember, Brian, when Ethereum started to grow and BTC was falling, as you mentioned, during the coming few weeks?
Yeah, I think you're talking about a couple weeks after the launch, right? Because Ethereum had a much more clear surge that was just nothing but gaining, while Bitcoin was a little more choppy. Is that what you're referring to? Or maybe you can tell me what time range it was.
I think it was at the day when the Bitcoin spot ETF was launched. So I saw how Ethereum was performing quite well, and I sold a part of my positions on Ethereum.
Yeah, I mean, just eyeballing this, it went from 2,200 on January 22nd to a peak of about 4,066. So it almost doubled over these next, call it 7 weeks, whereas Bitcoin went from 38K to 73. I don't see too big of a difference, to be honest. We can precisely calculate if we do, let's see. I'm just going to put the prices of both on the same axis here.
Mm-hmm.
So if we go to January 23rd, I'm going to hold down Shift, and you can see at the top left of my screen, the comparison of both. It was actually Bitcoin that benefited slightly more. You might be, I mean, the one time I remember that was clearly Ethereum outpacing Bitcoin was between May 14th and the 22nd. I believe this was due to the hype over the Ethereum ETFs likely to be approved. And that's where we saw Ethereum go up 36% and Bitcoin was only up 13.6%.
Mm-hmm. Interesting. And the second insight that you wanted to share with us regarding spot ETFs?
The other thing we can do, if you give me a moment, I'm going to pull up our ETF dashboard.
Mm-hmm.
And what this will do is show us the overall volume of the top ETFs and also some of the inflow data as well. So I'm just going to refresh a few of these charts. Mainly what we want to look at is the overall performance in terms of top ETF volume. And that is this graph right here. So pulling this up, you can see that obviously the peak Bitcoin ETF volume was happening back here in early March, and it has been kind of choppy ever since. I'd argue that it's been on a pretty notable decline ever since April, when it was starting to drop off. We're still getting plenty of volume, don't get me wrong. This is just combining the top 7 ETFs. Yesterday was $1.3 billion worth of volume. So it's still seeing plenty of action. But if you compare it to the peak here on March 4th, where it was 11.12 billion, yeah, it's dropped off, something like 800 to 900% in volume.
Yeah, I'm curious to know and to understand from your point of view, from your data, who is dumping the market. So of course everyone saw some insights about Jump, Crypto, and few other players. But what type of players are selling right now, and when they will lose their positions, at least the majority of their positions? How do you think?
Yeah, so it is good news in terms of who the dumpers are. If we just combine the two smallest tiers, the 0 to 0.01 BTC wallets here in blue, you can see that they've dropped about 3.5% of their coins just in the past 3-ish months or so. So they're dropping to the sharks and whales, who we saw earlier are accumulating right now. If we go a little further up, so the 0.01 to 0.1, these are more of like the small wallets, but not micro. And they're actually accumulating pretty heavily right now. 1 to 10, these are kind of like the dolphins and the smaller sharks. They're kind of staying flat at the moment. And then you can see clearly the 100 to 1K wallets are just surging in accumulation right now. 1K to 10K, a little more choppy. 10K to 100K going very much down. But you can see the 100K. Look at this, like the amount of 100K, amount held by 100K to 1 million. They've added 24.3% more of the supply or of their existing coins in the past 2.5 months.
Can we make the conclusion here that right now the small micro wallets are selling during the past few months, and
Yes.
whales and few major holders who have 100,000 plus BTC, they increased their portfolio around 20%?
That's correct. I would even go as far as to just combine the 10 or more BTC wallets. If you look at, once again, 0 to 0.01.
Mm-hmm.
So since their peak back in January, about almost 6 months ago, they've dropped 5.6% of their holdings. Whereas if we just merge 10 or more, since that same time, how about exactly 8 months ago, January 5th, they've added a modest 0.31% of the
Mm-hmm.
supply. But especially in terms of absolute values, it looks a little bit better, because then we can see, including all of the mined Bitcoin, you can see this blue line here.
Mm-hmm.
Since the start of the year or so, they've accumulated 185,260 Bitcoin. And that's the most encouraging stat, in my opinion, because price tends to follow this blue line quite strongly.
Mm-hmm. Yeah, this is super insightful. Thank you, Brian, for sharing with us. I'm also curious to understand better the trends that are currently exist in the market. Of course, we had the beginning of the summer with a lot of meme coins, growth, new launches, and everyone were writing about it. Right now, I see that the trend in investment community is changing, and probably we can see similar from social media metrics. So if you can share this data as well.
Yeah, one chart that I've increasingly enjoyed checking out is the amount of social dominance from different sectors. There's 4 different lines fluctuating on this chart, and that is the social dominance of the top 6 coins of in the layer 1 department, then the layer 2 department, meme coins, and then AI and big data, which of course we see this huge anomaly here around the 23rd and 24th. But if we just take a look at each individually, you can see the most talk that layer 1s were having, especially Bitcoin, of course, which is leading the way. They were getting the most hype here in late June and maybe anytime between late June to mid-July. And then there has been kind of a drop down in discussion. Meanwhile, layer twos, they were getting, of course, the most hype in mid-July, and they've kind of dropped off. The urgence and interest in mid-August, and it's dropped off. But meme coins, this is probably the most interesting because they correlate so much with market tops. This one being a very obvious one here in late June, early July. Tons of people talking about, Dogecoin, Shiba Inu, anything in the top 6 is included here. And then AI was just this perfect top signal. Yes, I think a lot of people believe that AI crypto assets have a good long-term future. But for now, when you start to see a lot of discussion toward AI and big data, just as we see with meme coins, it often correlates with a top, as we saw here. If we get rid of this anomaly and just go before it, it might be more clear. But there's other tops as well, like right here. These were great signals that we were getting close to a top due to market greed. So if we just look at meme coins and AI and look at how they correlated with market tops, this is of course the most obvious one. And then there's a very recent one right here that also correlated with a top. So it looks like we need to keep these two lines low as a good signal for markets to rise once again. If you start to see huge spikes in meme coins and AI big data, that's when it's clear that the crowd is getting a bit greedy and straying away from the big large caps that often drive markets upwards. Of course, Bitcoin and Ethereum being the most obvious.
Mm-hmm. Understand. And what do you think about other narratives like real world assets and decentralized physical infrastructure? Our community is discussing these two narratives a lot during the summer. Do you think there might be some growth in terms of social media discussions as well?
Yeah, I think these are a little more niche. Real world assets have, of course, been a popular topic in particular in 2024. If we look at the social dominance over time for real world assets, let's see what we find. Let me add and assets so it's as clear as possible. So over time, you can see times where it's spiking, and actually very recently, on September 2nd, is where we saw a big social dominance spike for real world assets. And it doesn't look like they're correlating with bottoms. They're actually correlating more with tops. Again, I think anything that is straying people's interests away from Bitcoin and Ethereum tends to be closer to a top unless we're in like a flat out bull market, which we're not right now. Obviously, we've been declining since early March or mid-March when we hit that all-time high. And right now it looks like social dominance is quite high toward real world assets. If we back it up a little for comparison, we probably should see how real world assets have risen overall as a topic of interest. It's hard to measure before. No, actually, this should be okay. I know that there was an API change in summer of 2023, and Elon Musk's purchase of Twitter/X changed a whole lot of things. But yeah, there was this sudden rise in interest in March, and it's kind of fallen back down. Oh, there we go. Now it's refreshed. So yeah, you can see the rise overall since September of 2022 compared to now. It's very, very obvious that there's more and more social volume. So the crowd is clearly getting more interested overall. And you can even break it down by platform. Telegram is a bit all over the place. You can see how much Reddit has risen in interest toward real world assets over the past 2 years. Twitter as well. You can see there's kind of a pattern here where it drops down as the bear market started to commence. Before the rise in mid-July, there was just a decline, and now it's bouncing back up again. 4chan, not a ton of interest over time. Bitcoin Talk, not a ton of interest. Farcaster is definitely getting a rise in interest overall. They're a recently added platform, so we don't go back 2 years for Farcaster, but we do have the past 4 to 5-ish months or so. But yeah, it's obvious, especially from Reddit, that there's a lot more discussion here over time for real world assets.
Is the situation with DeepIn similar to what we see here with real world assets?
With what? Sorry?
With DeepIn, you already have DeepIn here as a category, I see.
Oh, DeepIn, got it. Yeah, so if we look at DeepIn, let's just take, the last 2 years is fine. Huge drop off in, okay, so this was due to the API change, so I can't include that. We'll just look at the last 6 months. And the biggest rise happened here in early July when we were really dropping off. And we're seeing a recent spike just in the last couple of days. Maybe you know something about why. I'm not as familiar myself. Do you know?
No, I do not think so. Maybe it was connected to different node sales that were happening in the market in DeepIn sector, but I'm not sure about it.
Yeah, it's certainly possible. But yeah, we are starting to see a resurgence in that discussion about physical decentralized infrastructure. So I'd keep an eye out for it. There's definitely a big spike on Telegram just in the past 24 hours, actually. Twitter, a very small spike as well. But yeah, it looks like this is mostly being powered by an increased amount of Telegram discussions.
Understand. And also, I see you were researching airdrops. You already have the topic here. Maybe you can also comment on it because we had few big launches this summer. Layer 0, ZK Sync, Blast, a few other blockchains launched their tokens. Do you think there is still a hype in airdrop farming, or it went significantly down during the summer?
Yeah, very little from what we can see. Airdrops are kind of like meme coins in that they're a reflection of greed and overall hype in holding more speculative assets for the purpose of getting niche rewards. And right now, airdrops have dropped off significantly in interest ever since the hype that happened right before this drop off. You'll often see spikes in airdrop interest right before prices fall. And at the moment, there's very little hype because people are just in a sour mood. There has been more and more negativity and uncertainty in the markets as prices have fluctuated the way they have, more negatively than positively. So I wouldn't expect for airdrop hype to pick up until overall crypto markets do again.
Yeah, I can agree with this expectation, but I also think that many people were truly disappointed due to the performance of the last airdrops, and they probably decided to switch or maybe change the industry. But of course, there will be many players who will stay here for a while, but unfortunately, there are not so many people who benefited from the last launches significantly. I mean, so the Layer 0 airdrop was not truly successful. I was one of the most one of the earliest users of Stargate, their platform, where I did a lot of bridges. I put some liquidity into the platform. The results from my perspective were just 100 or something zero coins. So it's around $300 or something for a user who was managing liquidity, bridging it, and providing it to the platform as liquidity provider. I do not think it's a significant amount of tokens, but there are thousands of people who were disappointed with the airdrops. I personally think that the criteria were quite biased and fair, but the results are not acceptable by the community.
Gotcha. Yeah, that's understandable. And it probably is being factored into this overall search of airdrops right now. The disappointment has led to a little more silence toward the subject overall.
Yes, but still, we were expecting many token launches during this autumn. Many projects delayed, and I think that was the right decision during the summer. Better to delay the launch due to the not so many people are active, and big investors like whales, they do not really like make important decisions during the summer. They try to actually do some yachting or just relax with family. But this is quite interesting to discuss the topic of airdrops. I would like to switch a bit because our community is more on the investment side in Bitcoin and Ethereum. Maybe you can share some other favorite charts about on-chain metrics for Bitcoin. I truly loved the previous one with the wallet dynamics, maybe Nupal or some others. Just curious to see what we have here.
Sure. So these are the last 6 months of some on-chain metrics here for Bitcoin. We can see that the transaction volume has kind of settled down. It's not doing anything too special at the moment. Volume is also quite steady, but not rising.
Mm-hmm.
And then as far as address activity, so this is the overall amount of unique addresses that are interacting on the network. And it's been pretty flat overall, not anything to be too excited about. The 30-day trend line actually shows that we're definitely on the decline, which is not the best of news. Circulation, same thing. It's really starting to come down. Generally, we want to see circulation and address activity rising over time as a sign that the network is expanding and becoming more active. And that's not quite the case at the moment. What is a good piece of news is the fact that the 30-day MVRV, so average trading returns, are at negative 6.2% for any wallets that have been active in the past 30 days.
Mm-hmm.
That generally means that we are in a less risky time in buying or adding more to our positions compared to the historical average time.
Mm-hmm.
And then 365-day active addresses are down about 2.6%, which is quite rare to see us in negative territory because most of the past year, this is the last 6 months, but you can see comparatively to early March, average traders on the long-term perspective were up a whopping 70% at one point, which was, of course, a good top signal. Average trading returns always hover around 0%, no matter what the time frame is. So the fact that the 30 and 365-day MVRVs were so high meant we were likely getting very close to a top because of how overheated the average wallet was in terms of profit. So now we've settled down. We actually went very negative in early August, and now we're semi-negative here in early September. So that's a good sign.
Yeah, I see.
Funding rates pretty flat at the moment. A little bit of a boost yesterday. People were longing a little bit, but overall it's kind of just fluctuating between a little bit of longing and a little bit of shorting. People are afraid to get too extreme for Bitcoin right now. Overall whale activity is down, especially $1 million or more transactions have come down significantly since March. So whales are kind of biding their time. We already saw that they are accumulating. Less transactions doesn't necessarily mean they're bearish or they're selling. It just means they're holding and waiting for some more volatility to become active again.
Interesting. After this, I'm curious to understand how macroeconomical environment influenced the trends during the summer and what events you expect to see and influence the market during the coming months.
I don't know if I have theories on that. I think the biggest would probably be the US presidential election. as well as the Fed's decision about cutting rates at the next FOMC. I think the US probably has the spotlight for the near future due to a few big decisions like that. And of course, any government bans that may impact crypto, more ETFs that are launched, such as Solana or XRP, and others that have been speculated from the community. Those would be the big sort of initiators of any future rallies or future dumps in my mind, without knowing too much about the future. Of course, we still have wars going on, Russia, Ukraine, as well as Israel-Palestine conflict. These are the kinds of things that major news could have some swings in the markets. If COVID comes back with a massive surge all of a sudden and catches the world off guard, that can have an impact, kind of like we saw in early 2020. But that would kind of be my summary.
Truly agree with you. The last question from my side: what new tools, maybe metrics, you developed during this summer? As a user of Santiment, I'm always curious to explore. So if you can share something with us.
Sure. I just talked about the new social narratives features in an article yesterday. I released this maybe 12 hours ago from the time of this recording. And we have this page called Alpha Narratives, which gives us an idea of which topics are gaining or losing steam compared to other top topics. So we can see just from this screenshot, Bitcoin and ETF inflows. There's an explanation as to why they're being talked about a lot. And it's a really good way to grasp what some of the news cycles are and why specific subjects are getting an increased amount of discussion at any given time. This article also goes over many of the topics that have been in the news over the past month, such as cat and whales, the institutional involvement, and the price movements of Toncoin, one of the best performers of at least the first half of 2024. The legal issues regarding OpenSea and the SEC, Serarium, Pepe, and many of the meme coins that have been getting huge pump and dump cycles, Bitcoin mining and the regulatory concerns behind it, NFTs and the digital art movement, sort of related to the OpenSea lawsuit, AI-driven blockchain and smart contract, of course, Pavel Durov's arrest, the founder of Telegram, crowd sentiment and overall market behavior. And it just explains a little more about how these different subjects can make the markets fluctuate the way that they do. So I recommend checking that out. And it goes over the new features on our social narratives page. If I open up the page here and give it a real-time look, we of course have a crypto narratives chart right here, which looks at more niche topics and how they're fluctuating over time. This is the Alpha Narratives page that I screenshotted. And then you can, of course, look at trending coins here, which right now we see a huge surge in Polygon discussion. Also SWC, Social Wallet Coin. There's Matic once again. So POL and Matic both getting discussion. Toncoin there, number 4. And it also shows you the bearish to bullish swings based on the crowd's sentiment toward it at any given time. We can also see similar for top 10 trending words and which hashtags or keywords are in the news right now. We see hacked here at number 3. This is a very common topic when we're in a bear market and people are starting to FUD toward crypto. People talk about hack and security and lack of trust toward crypto when they are upset about price performance. There's a very obvious correlation there. So I recommend Social Trends as a great, constantly updating platform here that gives a lot of different insight as to what's happening in terms of discussions in the markets.
Thank you, Brian. This was super insightful, as always. It was my pleasure to to have you with us today. Guys, if you love the content, if you would like to deep dive into different social media trends on Onchain Metrics, I definitely suggest you to have a look on Santiment and read the articles. As Brian mentioned, there is a new article with some metrics overview and new features that Santiment just introduced. Thank you, Brian, for joining us, and looking forward to our next session.
I enjoyed it, Ivan. Thank you so much for having me, and shout out to your wonderful community.